So good afternoon, and thank you for joining us today for the Banking and Finance Academy session on class actions. My name's Lindsay Lee. I'm a Senior Associate in the Banking and Financial Services team here at Brodie's, and I'm joined today by Jared Oyston and Fiona Chute, who are going to be doing most of the talking in this session. Jared's a partner in our dispute resolution team. He's an experienced commercial litigator and has been involved in a wide range of commercial and corporate disputes before the English courts and in international arbitration. Jared acts for a wide variety of clients, including many financial services firms. Fiona is a senior associate in our dispute resolution team too, and she has a particular experience in high-value disputes in the commercial court at the Court of Session. Those include class actions brought under Scotland's group proceedings rules, and she is also a regular contributor to our class actions blog. So just moving on to what we're going to cover today. We're going to look first of all at the group proceedings rules in Scotland. Then we're going to look south of the border at the group litigation orders, or GLOs, in England and Wales. We're going to look at trends that we've been observing in class actions against banks and financial services companies. Then we're going to look forward to see what we think is coming down the tracks and our view on that. And then lastly, we're going to give some tips on preparing for and responding to group litigations. We're aiming to deliver all of that in around 40 minutes, and we're going to do our very best to stick to that today. So with that said, I think I will hand over to Fiona.
Thank you, Lindsay, for that introduction, and thank you everyone for joining us today. So to begin, I'm going to set the scene a bit by providing an overview of how class actions work in Scotland. And we usually refer to them as group proceedings in Scotland, just because that's how they're referred to in the court rules. And as it says on the slide, class actions have only been possible in Scotland since 2020. And whilst that's a good few years ago now, we haven't yet had any class actions under these rules make it as far as a proof or a trial. So we're still actually at kind of a relatively early stage of these rules. And before these rules were brought in, the courts in Scotland did have mechanisms for similar claims to be conjoined, but this was done on an ad hoc basis. And I think everyone involved agreed it didn't really work that well. So a new regime was designed and implemented. One important point to bear in mind is that the rules in Scotland only allow for opt-in class actions at the moment, which means anyone who wants to join the class or the group has to formally ask to be included or give their consent to be included. Whereas in the US and in some types of proceedings in England, you can have opt-out proceedings, which is where any person, and that can include a corporate person, such as a company, any person who falls within a defined category or class is automatically included in the claim unless they ask to be removed, but we don't yet have that in Scotland. There is a section in the Scottish Group Proceedings Rules which explains how opt-out proceedings could be brought in, but those sections of the rules haven't been brought into force yet, and there's no indication from the court as to when they will be. So for now, opt-in only in Scotland. And group proceedings can only be brought in the Court of Session in Scotland, so they're not competent in the Sheriff Court or any other Scottish court. And the rules do provide for quite a complicated procedure, I think it's fair to say, to launch the claim, starting with two applications which need to be served on the proposed defender or defendant. And those are the application to appoint a representative party, and that's a single person who will lead the litigation on behalf of the group and represent all of their interests. And then a separate application to allow the claims of all the members of the group to be brought as one single group proceeding, so one single class action. And if we move on to the next slide now, this provides a bit more information about who can be a representative party and what the court will consider when deciding whether the proposed person is suitable or not. So in the group proceedings that have been launched in Scotland since 2020, most of them have had a representative party who is themselves a member of the group. But there has been at least one where an advocate, so a lawyer, has been allowed to be the representative party because it wasn't practical for a member of the group to do it. And anyone who would be a defendant to a class action has the right to object to this application to appoint a representative party. But what we've found so far is that it's quite hard to object to whoever's put forward. The first three of the factors listed here on the slides tend to be relatively low hurdles. and the court hasn't been insisting on the representative party having any special abilities or being particularly well placed to run the claim on behalf of the whole group, because almost always the group will be advised and represented by solicitors and counsel. So the court tends to be satisfied with most of the representative parties who are put forward in these group claims. The one area where the court does tend to scrutinize the application more closely, though, is in relation to the final bullet point there in the list of factors, the representative party's financial resources to meet any adverse costs award. So if the group fails in its claim and has to pay the defender's legal costs, you need to know that that's going to be possible and the defender isn't just going to be left successful but with a huge bill. But these group claims are almost always backed by a third party litigation funder or an after the event insurance policy. So the groups that we've seen in Scotland so far have all been able to satisfy the court that any adverse costs award would be met, and they provide proof of that funding or undertakings as the court requires. If we move on to the next slide, this shows the factors the court will take into account when considering the second application that I mentioned, and that's the application to bring group proceedings. And here the court has to be satisfied that the members of the proposed group have claims that are sufficiently similar to each other that it would be proper to bring them together into one group, and it would be more efficient to deal with them that way rather than in separate actions. And with a large enough group, it's usually pretty obvious that it's going to be much better if the claims are all very similar to do it as one single group proceeding, rather than have potentially thousands of claims proceeding through the court separately or with different timetables. The representative party also has to provide evidence that all reasonable efforts have been made to identify and notify potential group members. So that might include things like television or newspaper advertising or advertising on social media, depending on the claims. And I know when I've been at the cinema in Edinburgh, I've sometimes seen adverts asking me if I fall within a particular class and want to join a particular claim. The court also has to be satisfied that, based on the information it has at the time, the claims have a real prospect of success. But as we've noted on the slide, so far, these seem to be quite easy bars for potential groups to clear, and we haven't seen much willingness from the Scottish court to entertain objections from defenders about things like minor factual differences between claims, as long as they are reasonably similar. And in overview, I would say the Scottish rules have been working reasonably well so far. The court and those of us who are acting for parties in group claims have been gradually getting to grips with the rules and the procedure. And there's now around a dozen class actions which are live before the Court of Session in Scotland, with more expected each year. So we're getting to grips with it. And I'll now pass over to Jared, who's going to provide a summary of the regime in England and Wales, which it's fair to say is more mature and well established than the regime in Scotland.
Thanks, Fiona. So as Fiona said, the regime for group proceedings has been in place for rather longer in England and Wales. So what are known as group litigation orders, or GLOs, came into operation in May 2000. And GLOs have since then been the main procedural mechanism for large group litigation in England and Wales. Although that regime is more well established, I think there is an extent to which in England as well, GLOs remain something of a novelty, certainly in comparison with some other jurisdictions which have very mature group litigation cultures, most obviously the United States. In the 25 years since GLOs were introduced, there have only been 124 GLOs actually made, which might sound like a large number, but it's just under 5 a year. And in part, this reflects the availability of other mechanisms in England and Wales for managing group litigation. So the courts have always, or certainly for a long time, have been able to use their general case management powers to manage cases together. And in many situations, for example, where there are only a modest number of claimants, it will still be more appropriate for the courts to manage cases together under those general powers rather than making a group litigation order. Nevertheless, there has been undoubtedly, I think, a greater focus on GLOs recently, including greater public interest, which we do anticipate will lead to a greater frequency of GLOs over the coming years. Some of the more high-profile cases that you may be aware of from recent years in the financial services sector, the Lloyds HBOS litigation, which was the very first shareholder class action in which a group of Lloyds shareholders brought a claim against the bank in relation to losses that they said were caused by the acquisition of HBOS in 2008. The Barclay Burke SIP litigation, in which customers of Barclay Burke brought claims in respect of losses arising from being induced to move across to self-invested personal pension plans. One of the most famous ones of recent years is the Volkswagen litigation. This is where customers of Volkswagen have alleged that they were induced to purchase vehicles on the basis of false claims about the emission standards of those vehicles. And possibly the most high profile of all in terms of newsworthiness is the Hillsborough litigation, where a GLO was made in favour of the victims of the Hillsborough disaster who brought claims in negligence against the South Yorkshire and West Midlands police. So there's been a real mix of claims over that quarter of a century, many of which have really captured the public interest. And I think it's fair to say that public interest has contributed to something of a cottage industry, which I think Fiona's referred to in with her cinema anecdote of firms looking for the next GLO opportunity and essentially looking to bring large scale litigation on behalf of claimants who might not otherwise be able to afford to do so. So just moving on to the next slide in terms of how GLOs work. They operate, as with group proceedings in Scotland, on an opt-in basis. So there's no passive participation. You have to actively sign up. GLOs are always at the court's discretion, and that means there's never a guarantee of a GLO being granted. There's no checklist, there's no critical mass of claimants or issues that will necessarily trigger a GLO being made. But that discretion also means that a court can make a GLO entirely of its own volition if it is seeing the same kind of cases come before it. It can do that even if no claimant has actually requested it. And as to how that discretion tends to be exercised, a few key principles have emerged from the civil procedure rules and the cases that we've had over the last 25 years. Obviously, there have to be a sufficient number of likely claimants to make it worthwhile. The courts have indicated that there have to be, what that means is significantly more than two, which I appreciate is not necessarily the most helpful guidance. But the number of claimants in GLO cases that we've seen to date include as few as 20 in one case and up to many thousands, for example, in the Volkswagen case. Similar to Scotland, the claims, however many there may be, must involve common or related issues of fact or law. It's clear that the cases don't have to be identical, but there has to be a real commonality in relation to at least some issues. So, for example, courts have been reluctant to grant GLOs where it's clear that there were materially different contractual arrangements in play or materially different factual allegations. And you can see this is part of the reason why GLOs are of particular interest to businesses in the banking and finance sector, because those kind of businesses tend to deal with a large number of customers. They tend to deal with them under standard terms, and they generally seek to treat customers in the same way. So if a bank, for example, has breached a contract or a duty to a particular customer, causing it loss, there may be a real risk that they could be alleged to have done the same to others as well. So where a GLO is made, it will have a number of important effects. Similar to Scotland, GLO will always mandate the creation of a group register of all claimants which have opted in, and that has to be kept up to date. It will always set a cut-off date for new claimants. That will inevitably trigger a bit of a frenzy of activity by the law firms involved, essentially seeking to bring in as many eligible claimants as they can. So there'll often be a bit of a procedural battle between the claimants' representatives and the defendant over how long should be allowed before that cut-off date kicks in. And very importantly, for all registered claimants, all the judgments and orders made in the litigation will be binding upon them. And that essentially eliminates the risk which is inherent whenever a court is dealing with similar cases, which is the risk of inconsistent judgments arising across the various cases. So moving on to the next slide, in terms of what the procedure looks like, there are certain procedural steps that parties have to take in order to seek a GLO. So in addition to having already issued a claim, a party will then have to apply to the court to make an order for a GLO. And the application has to set out a number of sort of key pieces of information which are set out there on the slide, things such as details of the claims that are already known, number of further claims, the factors that unite them. And that gives the court the core information that it needs to consider whether a GLO is appropriate. It's also important to note that GLOs will always require higher consent. So no court in England and Wales itself has the power to issue a group litigation order. Whenever a court is minded to grant a GLO, it must first seek the approval of essentially the head of that branch of the court. So, for example, if a Chancery judge wants to make a GLO, they will require the approval of the Chief Chancery Master. And that's really intended to ensure that GLOs are not overused or abused, and that there's a broadly consistent approach being taken to permission. So moving on to the next slide, in terms of how a case proceeds post the making of the GLO, there are a couple of features which are distinctive to GLOs. So the GLO will always be publicised. All GLOs must be published via the Law Society, but the court will often give directions for further publicity, for example, in the national press. In practice, the law firms themselves will often be naturally incentivized to gather as many interested claimants together as possible. Speaking of solicitors, similar to in Scotland, the court will appoint a lead firm of solicitors, or sometimes more than one, in larger or more complex cases. And you can see how that would be quite a sought after role for the law firms involved as they look to sort of maximize the share of the work that they'll be doing going forward. Beyond that, though, cases under GLOs do proceed in quite similar ways to ordinary court litigation. So what that means is a GLO is intended to facilitate efficiencies, but not shortcuts. Parties still have to prove their cases, and they do that in the usual way, essentially through documentary and witness evidence. So disclosure and witness evidence will still have a vital part to play in litigation under a GLO, and it's fair to say that that can pose significant procedural and logistical challenges, and that's really where the flexibility offered under a GLO comes into its own. It would obviously be completely self-defeating to have a group litigation in which every claimant had to give full disclosure of documents or had to put forward witness statements. So there are a few ways in which the court, under the sort of broad powers that they have under a GLO, might approach case management to maximize efficiency. Those include, we've got on the slide there, test cases. So this is where the claimant's solicitors will identify, if you like, a paradigm case or cases which manifest most clearly the issues which unite the claimants. That case would then proceed essentially as if that claimant were the only claimant. And then once a judgment is given, the other cases will either stand or fall based on how similar they are to that paradigm case. The other approach in terms of efficiency is the use of preliminary issues. And this is where, rather than identifying a particular claimant whose claim should go first, the parties identify certain gateway issues. And those will often be common but quite discrete issues. So, for example, points of contractual interpretation or the validity of an exclusion clause, which don't require much evidence, but which, due to their commonality, will have the effect of either eliminating or vindicating at relatively low cost large parts of the claims. So preliminary issues are a feature of regular litigation as well for the same reasons, but they tend to be used much more frequently under GLOs where the time and cost savings are potentially that much greater. In terms of the procedure, finally, a word on costs, because this is an area in which GLOs have quite novel features. So the general rule in relation to costs applies equally in GLOs as it does to non-GLO litigation. That general rule is that an unsuccessful party pays the successful party's costs. What is novel about costs under a GLO is that it has a distinct regime for apportioning costs among claimants. So what it does is distinguish between common costs, so costs which can be said to have been incurred in furthering the party's collective case on the common issues, and individual costs which can be attributed to legal or procedural issues which are specific to a particular party or group of parties. And what the rules provide is that the common costs are borne equally by all claimants. And you can see that this has both pros and cons for claimants and defendants. On the one hand, it's favourable to claimants and indeed might encourage claimants by ensuring that they can never be liable for more than their own equal share of the common costs. On the other hand, it ensures that costs are borne equally, no matter the stage at which parties join the litigation. And in particular, this means that there is no sort of free hit element for a party who joins late. A party who joins late will have to pay an equal share of the costs that were incurred prior to its joining. So in that sense, the costs regime discourages parties who might be minded to sort of sit on the sidelines and monitor the direction of travel and row in behind others later on. So the cost regime seeks to strike some form of balance between being claimant friendly and allowing claimants to get involved in litigation they might not otherwise be able to afford, basically, whilst ensuring that there can be no sort of free ride for opportunistic claimants. Moving on to the next slide, I was just going to say a few words about what we call the CAT, the Competition Appeals Tribunal. So in addition to the Scottish group proceedings and English GLOs, the Competition Appeal Tribunal has jurisdiction across the whole of the United Kingdom and has its own collective proceedings regime. And this is where the opt-out proceedings that Fiona mentioned come in. The key thing to be aware of with the CAT is that their collective proceedings, unlike the others we've discussed so far, you can seek permission to bring a claim on an opt-out basis. And that means that anyone who falls within the class definition is automatically included as a claimant unless they opt out. And those classes can sometimes be, mind-bogglingly big. So to give you a few examples of recent CAT claims, that would include everyone who bought certain train tickets between 2015 and 2021, everyone who had certain BT phone services up to 2015, and in the biggest claim that we've seen to date, which is the claim brought against MasterCard in relation to interchange fees, that's everyone who bought anything from a shop with a MasterCard between 1992 and 2008. So you can see there that's a huge number of people who have possibly bought nothing more than a Mars bar with a MasterCard, in 2001, who are automatically included within this opt-out regime. The good news for defendants is that the CAT doesn't always give permission for actions to proceed on an opt-out basis. A good example of that is the FX collective claims, where two different class representatives competed for the right to bring opt-out claims against a number of defendant banks, including NatWest Markets and RBS. But the CAT decided that the claims could only proceed on an opt-in basis, and generally speaking, that is far less likely to be viable, particularly where claims are very small individually. So that's just a very short sort of summary of the position in relation to the CAT. So I'm now going to head back to Fiona to talk about current trends and some horizon scanning.
Thank you, Jared. So in terms of trends that we've seen over the past few years, the main trend we would highlight is just that class actions have been increasing steadily in the UK over around the last decade, and in Scotland since their introduction about 4.5 years ago. One of the drivers of this increase was the introduction in 2015 of the collective actions regime in the CAT that Jared mentioned, which gives would-be claimants another avenue for bringing a class action. But GLOs have been increasing in the High Court too. And the increase has been fueled by growth in the availability of litigation funding, which is where a third-party funder, such as a private equity firm, covers the costs of bringing the class action in return for a share of any court award or settlement payment. And the third-party litigation funding market has really grown quite significantly in the UK, following on from the US. And there's also been an increase in specialist claimant law firms, and they've made raising class actions a key part of their business model. So they are actively looking for potential claims and they advertise for claimants. They're not waiting for would-be clients to come to them. They're out there looking for them. And these firms will often have partnerships with litigation funders so that they have access to significant resources to bring the claims. If we move on to the next slide, we've included there a snippet from an article in the Lawyer magazine recently about a claimant firm called Pogust Goodhead. But that's just, an example of one of many firms. And you'll see there they previously received $550 million. And as of this article in November, we're receiving a further loan from their financial backers to help fund environmental group claims. So these are really serious sums of money that the claimant firms have at their disposal to bring these class actions, which has just made them all the more likely. If we move on to the next slide, here we've set out the types of class actions that financial services institutions have been facing and that we think they'll continue to face. And many of these, but perhaps all, could be brought as individual claims, as well as a class action, depending on how the claimants organize themselves. If we start in the top left-hand corner, undisclosed commissions litigation, these types of claims typically involve allegations that a broker has received a hidden commission from a lender for sending a borrower to that lender, but without disclosing that to the borrower. And then moving along clockwise, I'm sure we've all heard about various kind of financial mis-selling allegations over the years. So, for example, claims for repayment of payment protection insurance premium, PPI, And whilst many of these sorts of claims can be dealt with by the financial ombudsman, and sometimes there'll be a particular scheme put in place for redress, there can also be scope for these claims to be dealt with in the courts in the form of a class action, subject to things like the claims being brought within the relevant time limits and such matters. And if we move along to the top right-hand corner of the slide, we have breach of data protection legislation, which is a risk for any kind of business dealing with individuals. As an example, there was a GLO in England and Wales for a class action against British Airways, arising from a breach of their IT systems in which personal data was accessed back in 2018. If we carry on clockwise, we have compliance breaches. This could cover all sorts of potential claims by groups of individuals, including for things like compliance with competition law and regulation. So those claims could be brought in the CAT and on an opt-out basis. We then have rates manipulation claims. So we've seen claims against banks concerning the alleged collusion to manipulate LIBOR, for example. And then finally on that slide, we have securities litigation, which is one of the most common types of class action faced by publicly traded companies in the US and in Australia as well. And this is where shareholders in a company bring claims against that company. Bring claims against a company, and it has to be a listed company, to try and recover losses as a result of a drop in the price of their shares after public statements made by that company turn out to be untrue or misleading, or after an adverse regulatory finding. And if we move to the next slide, this is our attempt at a bit of crystal ball gazing to see what we think the future looks like in terms of class action risk for financial services companies. So the first area where an increased risk has been predicted is in securities litigation, which was the final type of claim that I mentioned on the last slide. And the reason why an increase is predicted is because we know that claimant firms are proactively advertising for shareholders to join class actions whenever a corporate scandal comes to light or whenever there's a sudden drop in the share price. So an example from a few years ago is when the patisserie Valerie chain collapsed after potentially fraudulent activity was discovered in terms of its accounts and its audit process. And within days, claimant law firms were arranging third-party litigation funding, and they were speaking to institutional investors in patisserie Valerie about a possible class action. But there is a caveat to this prediction. And that's that the High Court in England and Wales issued a decision in November in a case against Barclays, which makes it significantly harder for claimants to succeed in securities litigation in the UK than they would under the equivalent regime in the US. And that's because the court in England said that members of a class looking for a remedy under the Financial Services and Markets Act 2000, which requires the issuer of shares to compensate investors who've suffered a loss in reliance on public statements. Each of those members of a class would have to prove that they had read or heard the statement or information that later turned out to be false. And they'd have to prove that they then decided to invest based on those statements. And that's a much harder test to pass than claimants have to pass in the US, where there's a presumption that investors have relied on the company's public statements when they make their investment decisions. So in the US, you don't have to prove that you actually did read it or you actually did hear it. After this decision in the Barclays case came out in November, the claim was settled soon after, before going to appeal. So it's just a High Court decision at the moment. We don't have Court of Appeal or higher court authority on the point. And we know that there are similar cases coming to the courts this year, which could go a different way. So for now, it's a watch this space area for how much of a difficulty this is going to pose for would-be claimants in bringing class actions for redress under the Financial Services and Markets Act 2000. Another area where we're predicting an increase is ESG related claims, so environmental, social, and governance. There's plenty of litigation regarding climate change around. And if we think about the example of greenwashing, you could envisage groups of shareholders bringing effectively a securities litigation if the share price in the company suffers when it becomes clear that a company has engaged in greenwashing, so made overly optimistic statements about environmental credentials. Another trend that looks set to continue is that of novel or unusual case management by the courts, both in Scotland and England. The High Court has already shown a willingness to proactively manage multiple multiple GLOs together. We've seen that in the diesel emissions cases known as the Pan-NOx litigation, and that involves about a dozen GLOs that are now being managed together, with some of the GLOs being lead GLOs and some of the GLOs just being subordinate and having to wait and see what happens with the lead GLOs. And we might see the same happening in Scotland to the various claims which have been brought against car manufacturers arising out of the same allegations. And so you could easily see the court taking a proactive or novel case management approach if group claims were brought against, for example, different lenders, but arising out of similar facts and on a similar legal basis. And finally, on that slide, this isn't a future trend that will be unique to banks or financial services institutions, but we do think the risk of class actions arising from data breaches is likely to increase for all customer-facing businesses, just as the digital transformation continues and as cybersecurity races to keep up with hackers. And if we move to the next slide, just some final thoughts before I hand back to Jared. So, unlike in the US, we still haven't seen what we've called here a mega award in a class action in the UK. We haven't seen the court ordering a company to pay sums in the billions of pounds to a class. But it does seem that one will come sooner or later, and that's most likely to be in the CAT because, as Jared was saying, those can proceed on an opt-out basis, and the potential classes can be so much bigger. But as of halfway through last year, sorry, there were 47 active proceedings in the CAT with a total of 160 billion pounds being claimed, but we still haven't seen any final court awards. The first collective action to get to the stage of a judgment after a trial was the case there at the fourth bullet point, Le Paterel and BT Group, but BT was successful in having that claim dismissed, so no award was made. And when we do finally get a mega award of this type, it will also be very informative and interesting for lawyers in particular to see how many members of the class actually come forward and claim their share of the compensation. And recently there was a high-profile settlement of the class action against MasterCard that Jared mentioned, although I did see a news article this very day saying that the litigation funder has fallen out with MasterCard over that settlement. So let's see if that survives. But there was a settlement, and based on what the lawyers involved have said in kind of press releases and in public statements, it's clear that that their calculations are proceeding on the assumption that only a small proportion of the class will actually go to the effort of claiming, particularly if it's quite a small amount and there might be a sort of administrative burden for members of the class to claim their £40 or whatever it might be. There seems to be an assumption that only a small proportion of the class will ever come forward. But of course, the more who do, the more who do claim their share of the pot, whether that's from a settlement or from a court award, the less each member of the class will receive. I'll hand now back to Jared, who'll conclude by giving some tips for preparing for and responding to group claims.
Thanks, Fiona. Yeah, so as Fiona says, I'm going to just round off with a few minutes on things for defendants to think about when, looking at the possibility of, potential or actual group proceedings being brought against them. The good news here is that by their nature, a class action is unlikely to come out of the blue, unlike sometimes a piece of ordinary commercial litigation can sort of come from somewhat left field. By their nature, class actions will often involve issues that customers have been complaining about, or issues that are of broader societal interest or controversy, things that have been in the news, and very often it is that gives rise to the group proceedings. So businesses can be and should be horizon scanning for potential sources of claims that could mutate into class actions. Businesses could also take some advance warning from what's going on in other jurisdictions. Business is so globalized these days that, if a business practice is going on in one jurisdiction, then the chances are it's going on in others. So, for example, some of the class actions that we've seen in England and Wales have been preceded by or followed by similar class actions in other jurisdictions, for example, in America. A related point to that is that potential defendants shouldn't make sort of overly simplistic assumptions about where class actions can and can't be brought. Just because Scotland or England and Wales doesn't appear to be the most appropriate forum for a class action, perhaps because the wrongdoing or the damage has occurred somewhere else, that doesn't mean that claimants and their representatives will not be looking to try to bring a class action in those jurisdictions if it suits their purposes. So, for example, it may be that the damage from a particular action has happened in another jurisdiction, but that jurisdiction doesn't have a robust class action regime. In that situation, the lawyers involved will be looking, well, where else is there a connection to that perhaps does have a good class action regime, and that might be America, it might be England and Wales, it might be Scotland. So you do see procedural forum shopping by litigation savvy claimants, and they will be looking at things such as the connection with the jurisdiction, the efficiency of the procedure, how quickly they can get to financial redress, exposure to costs, those kinds of things. So all of that means that the potential target of a class action is going to need both a global strategy and local legal advice. Parties need to be asking themselves, if this is coming, where might it happen? Among those, where would we rather it happens? And what do we need to do in X or Y or Z jurisdiction in order to be ready for it? If a party finds itself as the defendant to a set of group proceedings in England, Wales, or Scotland, a few key things, if we can just move on to the next slide, a few key things to have in mind. The first thing is that one of the things that I think you'll have picked up here is that all the regimes in the UK all have in common that there's some sort of certification or permission to proceed required. And that's usually all about sort of a question of whether the issues and the claims are sufficiently similar and give rise to common issues. So as a party looking to defend this type of claim, the best result actually is to be able to defeat the claim at that permission stage, because if you can do that, what you're left with is a load of individual claimants who may or may not be motivated and sufficiently well resourced to bring claims in their own right. So when group proceedings are threatened or commenced, one of the key considerations for a party defending should be whether the group proceedings can be resisted on the basis that the issues and the claims just aren't sufficiently similar. So are there fact-specific issues that make it inappropriate to treat the cases in the same way? So, for example, in a mis-selling claim, can you argue that the advice given to the various claimants would not have been sufficiently similar? And that might be the crucial difference that means that a GLO in England, for example, isn't awarded. But there are other things as well, in addition to the commonality point, that will allow a defending party to argue against the making of a group litigation order. We've spoken already about the need in Scotland, I think, to be able to sort of establish the prima facie case. The Competition Appeal Tribunal, for example, will consider the costs and benefits of proposed proceedings when faced with an application for an opt-out claim. So it's important to know the test that the particular court or tribunal will apply and use that to try and head off group claims at the first stage if possible. Another key thing to think about is, because of the nature and size of group proceedings, it is very common for certain issues to be carved out and dealt with separately, and very often that can cut through a significant part of the case. So, for example, one of the more challenging aspects of group litigation is often quantum, the amount that any particular claimant has suffered. So it's often, and that can be a very expensive exercise, sometimes involving expert evidence. So very often a defendant will look to defeat the claim first on liability, and thereby sort of avoid altogether the need to go through that very expensive process of quantification. So there may be opportunities for a defending party to persuade the court to deal with certain issues in advance of others. So really, a party needs to be thinking at an early stage about what the issues and the claims are, whether any of them can be dealt with at an early stage. The claimants, on the other hand, might prefer essentially to have everything held over to a trial, basically because if they can get a 10, 20-week trial fixed for 2 years' time, that can put significant pressure on defendants to settle. And speaking of settlement, it sometimes will make a lot of sense to try and settle a group litigation, but that can present its own problems because settlement dynamics in a group litigation can be more complicated than in a more ordinary conventional action. So, as well as the usual considerations about the right figure to settle at, you also need to take into account who has to approve the settlement and what are their motivations and their duties. So, in all cases, certainly in England and Wales, the class representative will have to agree to a settlement. But where there's a litigation funder involved as well, as there often will be in these cases, the class representative will usually be obliged to at least discuss any offer with the funder and take their views into account. Similarly, an extra factor in the CAT is that the tribunal also has to approve any settlement. So there are lots of different parties and motivations and duties to take into account. The class representative, for example, is tasked with acting in the best interest of the claimant group, but their own view of what is in the best interest of the claimant group might depend on who they are. Sometimes they will be a claimant themselves, but there are examples of claims where the representative isn't a claimant but is perhaps a consumer group or other lobby group, and they might have more of an interest in sort of getting to court and getting that sort of principled victory than just getting a payout for other members of the group. The funder, on the other hand, is likely to take a much more sort of dispassionate approach. They just want a good return on their investment. So settlement offers at different levels mean different things to the different people involved, and that can present both opportunities and challenges for a party defending one of these claims and looking to settle it. I think that's everything I was going to say on sort of practical tips for potential defendants and defenders.
Great. Thanks, Jared. And thanks also, Fiona. Really interesting presentations. I've certainly learned a lot today. In the few minutes that we have remaining, perhaps we could just ask a couple of questions. We've touched at least a few times on the role of litigation funding in class actions. Jared, where does litigation funding stand at the moment following the Supreme Court decision in the Trucks case?
Yeah, so for those who might be less familiar with this, the world of litigation funding was thrown somewhat into disarray in 2003 when the Supreme Court was dealing with a case relating to effectively sort of a cartel price fixing among truck manufacturers. And the court in that case held that litigation funding arrangements, which entitle the funder to a payment based on the amount of damages recovered, are to be classified as damages-based agreements. And the significance of that is that a DBA must comply with the damages-based agreements regulations 2013 or risk being unenforceable. And up until that point, many such funding agreements did not comply with those regulations, partly basically because it hadn't occurred to the parties that they needed to. Similarly, DBAs are also completely prohibited in the Competition and Appeals Tribunal. So a key way in which these cases used to be funded by basically the funder taking a share of the damages recovered is now seemingly off the table. In terms of where we now stand with that, so the previous government was committed to restoring the position pre that Supreme Court judgment. But those efforts didn't come to anything ahead of the election last summer, and that's currently in hiatus. And it remains to be seen how big, if any, a priority this is for the new Labour government. The Lord Chancellor has tasked the Civil Justice Committee with conducting a wider review of litigation funding. That consultation is ongoing. It's actually due to it closes for responses next Friday to its consultation. And then we are due a report and recommendations in the summer. So there's a lot of speculation as to whether that committee will recommend some kind of fix for this issue. But until then, parties to class actions and their funders will essentially have to find ways to ensure that their funding arrangements don't fall foul of the DBA regulations, which basically means structuring the deal differently and coming up with a different way in which the funder will recover their share of the upside of the litigation.
Thanks. So one to watch for sure.
Absolutely.
But just lastly, as we round things up, Fiona, maybe get your thoughts on this. So you mentioned securities litigation being one of the dominant types of class action in the US and Australia. Is that something that financial services firms in Scotland should be particularly concerned about?
I think in terms of how likely these kinds of claims are, until we had that Barclays decision that I mentioned earlier, I think we were of the view that this was a real risk for PLCs, but that risk has kind of lessened generally in the UK following that decision. Although with the cases coming through the courts this year, that could change. In terms of whether financial services companies in Scotland need to be prepared to defend those claims in Scottish courts, I would say if you are a Scottish headquartered PLC, then the Court of Session in Edinburgh would, on the face of it, be the natural court in which a group of shareholders would bring a claim. But as Jared said earlier, with forum shopping, that's not to say that shareholders in a Scottish PLC would have to raise the claim in Scotland. They'll usually be able to find a way to grant jurisdiction in the English courts as well, or in another court. And that's what happened, in fact, with the RBS rights issue group claim following the 2008 financial crisis. It was raised in England, even though RBS is headquartered in Scotland. Um, and as Jared said, there might be reasons why you'll choose one court over the other. One way that the Scottish courts might be more attractive to a group is that the disclosure phase of Scottish litigation is usually less involved and takes less time. So you could get to a trial more quickly and more cheaply if you raise your claim in Scotland. But overall, I think the approach that companies should be taking is be alive to the possibility that these claims could be brought in Scotland or England, and be prepared on that basis as best they can.
Thanks, Fiona. Well, watching the time, that brings today's session to a close. Thank you once again to Fiona and to Jared. Thank you to you for joining us. So thank you for doing that, and thank you also for joining us today.